first day of March, we're going to see both the national and regional numbers are going to come out. Our regional number is very strong. The national number is strong. These are going to be market movers. But I think what this is setting the stage for is a roller coaster in markets, meaning this up and down zigzag. Because even though this is a very good report for the month of February, our survey of supply managers in 9 states, stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, very strong. But again, the national number is going to show much the same, and folks are going to wonder, well, why, if we're doing so well, why do I feel so bad? And that's going to be the story. And we're going to see an up and down stock market, an up and down market because of situations outside the U.S. For example, of course, was Tunisia, then Egypt. Now it's moved to Libya. Where is the next shoe going to drop? So that's going to have some impacts.
Are we seeing improvements in manufacturing?
Absolutely, Cindy. Particularly anything connected to agriculture. It's dirt to dinner, and boy, it's a lot to do with dirt. You know, it's just growing, and so what we're seeing, Cindy, out there is job growth is a lot better in the non-urban areas. Now that's not necessarily rural, but non-urban, not the big cities as we think of them, Omaha, Des Moines, Minneapolis, Tulsa, Oklahoma City. It's more in the smaller towns, the non-urban areas. We're seeing real good growth, and a lot of that's traced to agriculture, exports. Those are the 2 factors that are driving things right now. It's driving the national number, which comes out again March 1st, as ours comes out March 1st. And those folks that view this a little bit early, going to get some inside information. I think it's going to be good information. But again, we don't know how the market reacts. The market's already incorporating in a very good NAPM or ISM number tomorrow morning, which will come out about 9:30 Eastern Time, 8:30 Central Time.
One thing we are seeing, though, that you have noted is the prices paid index keeps going up.
Wow, you know, Cindy, this is just remarkable. We have economists, and I am an economist, I'm admitting it right here, that we say, well, if you take out food, if you take out energy, and then, by the way, take out apparel too, it's not so bad. That's won't work for American citizens out there, consumers, our businesses. Our inflation gauge has been above 80 for 6 out of the last 7 months. And again, 0 to 100, anything above 50 is growth neutral, is just too high. We're going to see that in our overall CPI number. Mr. Bernanke, head of the Federal Reserve, Mr. Bernanke has been putting the pedal to the metal, and we're seeing it now. We're seeing it in commodity prices. We're going to see it in the CPI. And I'm not saying we're going to see inflation at 5 and 6%, but it's not going to be 1.5 to 2%. It's going to be between 2 and 3, maybe between 3 and 4. So everybody needs to get ready for higher inflation out there. And again, you look at the overall, what we sometimes call the headline number, it's going to be even worse. The core number, but that's not what people buy. People buy the whole thing. And the reason we take out food and energy, the theory is because the ups, today's ups, are matched by tomorrow's downs. I'm not sure we're going to see that. Not with oil, and not with food. Food's even a bigger factor. I think we could. Now, this is my own. I mean, no one knows except the Almighty, and that's not Alan Greenspan, by the way. No one knows where oil prices are going. I think overall we could see lower oil prices later on, but right now we're in a zone of higher oil prices, higher gasoline prices. Food, no. I argue long-term secular upturn in food prices. So that's going to hit consumers big time.
What else are we seeing? I mean, are we seeing better employment in this region? Are we seeing an improvement in that?
Cindy, we are. Our employment gauge, new hiring, was pretty good for the month of February. Again, urban not as good as non-urban. Anything to do with agriculture, very good. Anything to do with exports, very good. Domestic, depending on the domestic market and more on the non-durable side, not quite as strong, but even there, manufacturing is just looking very good, Cindy. It's just, this report is just showing up that this economy, this U.S. economy, is moving forward despite some wacky policy decisions over the last 3 years. To be fair, Republicans and Democrats been making some crazy decisions, bailout nation. So despite all that, we're still growing, and we'll continue to grow according to our survey.
And in that survey, we're seeing a growth in inventory.
That's absolutely this case. And that's a result of confidence. In other words, you build up your inventories in anticipation of greater sales. That's what we're seeing. The confidence number was very strong for the month, although it was down a bit, but still strong. And the supply managers that we survey, and again, about 700 to 800 businesses out there, a big sample, show inventories building up. And that of course, is going to be good. Well, I think the overall, you've got to say that unless we see some really supply side changes. Now, what I mean by that is some real restrictions on oil imports. For example, Libya shutting down oil, Iran shutting down oil, some real supply disruptions. This economy is slated to move higher. Now, that could thwart growth, and that would be the negative. That would be the negative that would, of course, slow this down. But right now, it's full steam ahead unless we see some of that.